Tax periods for VAT purposes. What are they? So a tax period is the period in respect of which VAT is calculated and paid over to SARS. And every vendor in South Africa is registered for a specific tax period, and you'll see it's linked to specific categories. But what's very important to keep in mind is that a tax period for VAT is not the same thing as the year of assessment that we use for normal tax purposes. The year of assessment refers to the annual period during which a natural person or a company do a taxable income calculation. So the framework, gross income less exemptions is income, less deductions is equals taxable income. A tax period is VAT specific. Now there are a few categories, and for our purposes we are only going to focus on 3 of those: category A, B and C. You will learn about the rest a bit later. So category A, if a vendor has a category A tax period, that means that their VAT is calculated every 2 months. This is a 2-month tax period. Now category A and category B is exactly the same way in that regard. Both of these categories refer to 2-month tax periods. In other words, VAT is calculated for every 2-month period. The difference between the two, because everything else is the same, but the difference between the two is that a category A vendor has their VAT period ends on odd numbered months. And when I say odd numbered months, what I mean is January is the first month, 1, that's an odd number. March is the 3rd month, 3 is an odd number. May is the 5th month, May, or 5 is an odd number. So December, January, that is a VAT or tax period for a category A vendor. So that vendor will account for VAT for the months December and January, and then they will account for February and March. So their second month, their 2-month period, tax period, ends on an odd numbered month. Category B VAT vendors, on the other hand, they account for VAT also every 2 months, but for months that end on even numbers. So February is the 2nd month, 2 is an even number. April is the 4th month, 4 is an even number. June is the 6th month, 6 is an even number. So a category B VAT vendor will account for VAT for January and February. That is their tax period. March, April, that's another tax period for that vendor. So the biggest difference between category A and category B lies in on which month they end. All right, so a category A vendor is always uneven months, January, March, May, etc. And category B is your even numbered months. Who qualifies to be in this category? Taxable or vendors or persons whose taxable supplies do not exceed 30 million rand in a 12-month period, and farmers with taxable supplies that are greater than 1.5 million in a 12-month period. And for both of these categories, category A and category B, those requirements are the same. Then what we also have is our category C tax period. Now this is a 1-month tax period. In other words, these are vendors who account for VAT every single month, right? So they don't use category A and B that looks at every 2 months. These guys have to effectively submit 12 VAT returns in a year. Every month there is VAT that they need to account for. So who qualifies to be in this category? Vendors whose taxable supplies exceeds 30 million in a 12-month period. So, you know, if your turnover, taxable supplies, you'll see taxable supplies has got a very specific meaning for us. If it exceeds 30 million in a 12-month period, you will automatically be registered as a category C vendor. You can also apply in writing to be registered on this, in this particular category. And then if you are a bit of a naughty vendor, if you're non-compliant or you're defaulting, you're not submitting your returns and payments as you should, then SARS is also going to put you into category C to make sure that you submit every single month.